So what's up YouTube? Welcome to Pips Layers FX. And in today's video we'll be talking about how we caught yet another trade on UJ, that's Usdjpy. We had so many other profitable trades from EA, which is Euro AUD, to CAD CHF, to so many other so many efficient trades we had, sniper entries, all in our Telegram community. So not to waste much of our time, we're talking about how we caught a trade on USDJPY from start to finish. As you can see on the screen, this is the snapshots we sent to the Telegram community before the reaction. And this is a snapshot after the reaction. Look at the result, look at the prices at the side, no manipulation, no editing, everything was done real and live. So let's move on to the chart to see how we did all this. So on UJ, I'm trying to clear all annotations on the screen so you can just see the big picture. So what do we have here? Basically, this is an uptrend. The order flow is bullish. Okay, I don't know what anyone else is saying, but in my own opinion, the order flow is bullish. So we should be looking for buys, right? Yes, and like I said in the previous video, if you haven't checked the previous video, I'll put the link in the description. When you are bullish, you wait for a break in market structure and then a retracement to get an entry. Okay, so in this whole markup, we have this impulsive move and then a retracement up to this level and then another impulsive move which breaks both market structures. This may be considered a structure, this may also be considered a structure. So there's a break in this market structure, which we know we have to wait for a retracement to get another entry, because we are following the market, we are following the big banks, we're following the smart money. So we have to understand the footprint and tag along. So wait for an entry into another block, a fair value gap. I mentioned all these institutional reference points in a previous video. So we are still bullish and there's been another break in market structure. So I anticipated a break of this structure. So what do we have here? Structure has been broken. Okay, anticipating a retracement. Now let's zoom in. Maybe I should just take out this liquidity void for now so everything comes clearer. Okay, so what do we have here? To some people, this is another block. Okay, they will take it as the last candlestick before the last bearish candlestick before the impulsive move. That's our bullish order block. So marking this up, should have this. So okay, but looking at this order block, we're always being told to mark up our entry at the 50% of the order block, at the open of the last candle, or at the close. But looking at this, if I should take out my, let's say, my Fibonacci tool and mark up the 50% of this order block, I'll have my entry here, which is a very, very big risk to reward for me. All right, very, very big risk, because if I should enter here, I would likely set my targets around this structure that was broken, and my stop loss would be beneath this. But this is a very, 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 very huge risk. I'm not willing to take. Come on, take a look at this. This is about 18, about 19 pips, which I don't risk on my trade. Okay, so I can't use this order block. I'll go in for something more efficient and something less risky. So I have to zoom in, rather move down to a lower time frame. So on this time frame, on the 1 hour time frame, we still have this order block. Okay, it's just like the one we saw on the 4 hour. Still risky, still risky. So we move down to the 30 minute. I use so many lower time frames to get a nice position entry on my trade. So before I move down into the lower time, I can see another a fair value gap here. So I'm going to mark that up. And drag it out. So we have the fair value gap. Now moving on to another lower time frame. Since we can't use this, the order block is very, very large, and the risk is very, very large as well. So on the 30-minute time frame, we have yet another fair value gap, otherwise known as an imbalance. So yes, also going to annotate that. Okay, but I won't annotate it because I removed the liquidity void. Liquidity void is also like the also an imbalance. Okay, so I'm just going to bring back the imbalance I hit the other time earlier. Okay, yeah, I think I have it somewhere. Okay, yeah, and there we have it, the liquidity void. Now this is an area of imbalance. This is another area of imbalance. Don't get this confused. This is another order block, like a better order block. But I looked at this imbalance and I saw that imbalance attracts price. Like the smart money move the market to fill areas of imbalance and grab liquidity. That's all. Now, this imbalance I anticipated should get filled. I still generated this, but I wanted to concentrate on this. Now, on this imbalance, before this imbalance, there is, or there was rather, another block. But this other block has been traded through, so it becomes a breaker block. If you don't know what a breaker block is, I just explained it. Another block that has been traded through and has been retested. This is our breaker block. So I expected the market to get into this breaker block, feel this imbalance to a large extent, and then rally up, setting our target at the previous break in market structure. So understanding how we did all this is we had our breaker block already annotated, we had the fair value gap. Now that's giving us much confluence because we have breaker block plus FVG, okay, and the liquidity void. We know the price will pull through that and going. Now we have how did we enter? We should mark up this place. I think I can delete this now. We should mark up this place as a zone. I'm not talking about supply and demand. I'm not talking about support and resistance. I'm just talking about our point of interest. This is our point of interest right now, and we should have an entry at this point of interest. Well, how do we mark this up? Just like I said, or just like people do, or just like it is, you take the 50%. This is another block. Take 50% of this breaker block. This is an order block that has been traded through. Do you get me? Okay, that has been traded through. It's not just an order, it's a breaker block because it has been traded through. It has been manipulated. Do you understand? Now, if you take the 50%, okay, and you place your entry at the 50%, okay, you see I have a nice entry, and this entry falls within the fair value gap, this fair value gap, okay, and your stop should be just below the fair value gap, just below it. So have you seen how you can trade a fair value gap, how you can understand what the market is likely going to do, the footprints the market makers are putting in this chart. Okay, so if you have a nice entry into this place, then set your target. I said at the previous break in market structure, and look what happened. It doesn't matter if it didn't react. This one here was actually, if you want to know how I got this precision, this precise and sniper, well, just come for mentorship. I'll take you down the way of precision, how you understand the level you need to place your entries at. Most of the time I use pending orders because I'm so busy. Just place the orders and leave them. Okay, but if you place your entry, like I said, on the 50% of this breaker block, you should have a nice entry as well. Okay, now look at it. We have 1 to 7.56, which is not totally bad. Okay, as a very nice trader, this is very a good one. Okay, so hitting it from the 50% of this breaker block, and look at what happened. The market rallied. Though it didn't go to the take profits we had our targets. That's the reason we always tell our traders, our students to break even. Always break even and take partials. Okay, take partials of as little as you can. You're in this market to make money, not to show that you are good, not to show they are perfect, not to beat the market makers. You can't really beat these guys. They are the ones driving the market crazy. Okay, so next time, I never wanted to make this video this long. Stay safe and be well. Thank you.